I'm not convinced that we're in a silver bullion breakout yet. I think silver is merely caught a bid. If you look at gold, gold is approaching its real as opposed to nominal all-time highs at $2,700. Silver's nominal high was $50, but the inflation-adjusted number is more like 80. So silver, I think, has a while to rip. In my own experience, as we talked about earlier, uh, precious metals bull markets are inevitably led by gold because the first buyer is a fear buyer. When the gold, pardon me, when the precious metals narrative gets established by gold and the momentum comes into gold, the next step is the generalist investor coming down into the precious metal space. And the generalist investor, whose motivations are both fear and greed, tends to favor silver because of its volatility and perhaps because of its lower unit price over gold. And then leadership changes to silver. And in my experience, when that happens, you don't have to look for some subtle signs. The upward price pressure on silver is so dramatic that nobody needs to tell you that silver is broken out. There are people now who will argue that a breakout in the silver price above 31 or 32 to 35 is something special. Judging from past silver bull markets, that's a rounding error. I mean, truly a rounding error. So I'm not convinced that the silver bullion is in a breakout phase or that leadership in the precious metals bull markets is going to shift from gold to silver. I remember in our earlier interview describing the high-quality junior stocks as a coiled spring. That wasn't so much about the fact that I thought the silver price was going to break out. It was about the fact that the silver equities were hated. They were hated, I think, because a whole generation of speculators was spawned in 2010, 2011 with the Reddit silver squeeze. They had expected immediate gratification. And when they didn't get it, let's just say that there's no hate as sincere as the hate of a jilted lover. And the junior silver stocks probably ran into 150,000 jilted lovers. Really, truly profound hate. And it seemed to me at that point in time that with or without the silver moving, that there was nobody left to sell. Everybody who wanted to sell, November, December, January, had sold. And that turned out to be, miraculously, even in terms of timing, exactly right. The higher quality junior silver stocks, I think we're going to talk about a couple of them today, are uniformly up 200% this year without the silver price moving that much. They're up on what I would describe as a dead cat bounce. They're also up on results, which is very, very, very healthy. It is arguable that those stocks don't need to go up anymore at these silver prices. But if past is prologue, and we have a silver bull market coming up, which is to say that the primary metal itself does what it has done, I think people will be surprised at the performance, the ultimate performance of silver equities. Notice that I preceded all of that with the word if. Speculators are looking for certainty, which I think is too much to ask for in any speculative market. You assign probabilities to outcome and you risk those probabilities. And that's maybe what we'll talk about today.
So over the weekend, I had dinner with the CEO of Abra Silver, John Miniotis. For all those listening, John has no idea that I'm asking Rick about his company. Rick, what are your thoughts about John? And I'll tell you mine, but I'd love to know what your thoughts are about Abra Silver and really about the CEO. To be candid, I think he's fantastic, but tell me about the stock.
Well, I should precede this by saying I'm long Abra Silver. So people need to know when they hear my remarks that I'm long. I'm not merely up, I'm way up. Note too that I have known the geologist there, VP Exploration, for 30 years. He used to work for Ross Beatty. I have a high degree of confidence in him. And I like John Miniotis. I like the fact that when I ask him to describe for me 3 things that can go wrong, he has 3 things that can go wrong right on the top of his head. He doesn't BS anybody, including himself. And that's important, because if you have identified at least 3 risks and you have contingency plans in place to deal with the risks, then you're a good CEO. You're not a used car salesman. I also like the fact that he understands capital markets. A lot of CEOs with an exploration project like this would raise money when they needed it. They play just-in-time chicken with capital markets. Millionaire raises the money when market conditions are good, as opposed to waiting until he needs the money. He has been criticized by some people for tapping equity markets too much. The fact that his stock is up 250% will tell you something about the fact that his strategic timing for raising capital, which allows them to run 8 or 10 rigs, is much more intelligent than this just-in-time BS that some people do to manipulate markets. So he's a high-quality guy. I also need to say, well, 2 things. The project Diablios is one that I helped Silver Standard buy many years ago, and I'm embarrassed to say that the exploration potential was completely lost on us. So I'm delighted that this team has taken a project and has done it justice. What is important to me with Abra Silver right now is it would seem that they understand the nature of the deposit or deposits so well that drilling has become predictive. In other words, they say, this is what we think is happening. We're going to test this idea with 8 or 10 drill holes, and the 8 or 10 drill holes confirm the idea. In my experience, often but not always, when the deposits are well enough understood that the drilling becomes predictive, you're at sort of a fulcrum point in terms of net present value additions. And I think we may be there with Abra. I think they understand the deposit. I think the nature of mineralization is profound. But importantly, it looks to me like the drilling is becoming predictive. When drilling becomes predictive, the amount of ounces that you add can, I'm not saying they will, but can go up dramatically. Note finally that the Abra deposit is in a fairly remote part of Salta province, so that the front-end capital costs are going to be pretty high, but they're coming down as a consequence of other precious metal developments, and particularly lithium developments on the Salta Plateau. So when you look at the fact that this is by nature vicuña pasture, high, dry, and remote, understand that there are other active mining operations within 40 kilometers, which is to say 25 miles of this deposit. Unlike when we had it in Silver Standard, and you had to get there by horseback or by helicopter, 2 unpleasant options. You can drive there now, which makes a big, big, big difference. So I hope that helps.
I asked John this, what can go wrong really?
Well, a lot of things can go wrong. Their understanding of the deposit and my understanding of their understanding could be wrong. Given where this deposit is, the front-end capital costs are going to be large. And that means that the deposit has to have really superb gross economics to overcome the infrastructure part of the front-end capital costs. In other words, a deposit of tonnage and grade, which would work on a paved highway in central Mexico, aren't going to work here. You are a long way from anywhere. You are high and dry. So the fact that it's an excellent deposit helps, but it's going to have to be a real excellent deposit. The second thing is that in some parts of Salta, there is a developing anti-mining sentiment at the local level. I last year drove from the capital, Salta, down 3 hours to Cafayate, which in the Calchique Valley is the access to the Altiplano where the mineral developments are. And there were lots of popular roadside signs that were anti-mining and anti-development. it would appear that the national politics in Argentina are getting dramatically better. But one always needs to pay attention to local politics in Argentina and the tendency of local caciques, big men, to mobilize populist support for political currency. And so that's something that you need to worry about. And I would suspect from my viewpoint, those are the two critical elements. Of course, you're going to have speculators in the stock who don't understand the time it's going to take to finish drilling this deposit off, that don't understand the progression in value from resource statement to preliminary economic assessment to pre-feasibility study to bankable feasibility study, don't have any patience with the permitting process and don't understand the amount of capital that's going to be required on the front end, both to fund remote mine construction, but also to fund power, camp, access, egress, wastewater management. This is going to be a very complex process. If it works, I think it's going to work, and I think it is going to work, by the way. I think it's going to work in spades. But notice that it isn't going to work on many speculators' timeframes.
Right.
In my experience, we've talked about this before, Andy, the anatomy of a 10-bagger, what's required to get 1,000% in a stock, is, among other things, 5 years or 6 years. Many people that invest in resources have a long-term thesis, a long-term strategy, but they employ short-term tactics. And that's not going to work here. If you're hoping for a 3-month hit, I don't know, go to Las Vegas or, do something fun with your money.
I would like to know your opinion of Dolly Varden.
Well, I need to say that I also own Dolly Varden. I need to say further, the stock has performed very well. It's performed so well that I sold enough that I have my initial capital back. I'm at what I laughingly call the point of no concern, where the stock that I have remaining is, in casino parlance, on the house's money. And I'm very happy about that. I share your high regard for Sean. He's a very, very bright guy. Mm-hmm. He is conversant and thoughtful on a lot of subjects, not just mining, which says something, I say, overall about both his curiosity and his intellect. As you suggest, he's young and has energy. If I had a caution around Sean, it's that he's doing too many things at once. He's involved in too many companies. He's involved with the Discovery Group, which is a very high-quality Vancouver group that's been responsible for global exploration, global development for a long time. Indirectly, the group itself is backed by Frank Giustra, a long-time Vancouver mine financier and friend of mine for 4 decades.
So I like all that.
The story around Dolly Varden is a lot simpler. They have a high-grade deposit, which has been known about for a very long time. It was in production in the 70s. It languished for a very long time because it was used for various stock promotions. There were some really good, high-quality hits. A new promoter would get it. They'd twin the old hit, get some big numbers, run the stock up, do a financing, live off the financing, and they never expanded the original deposit. When Sean got it, he got serious. As opposed merely to using the drill bit to ramp the stock, he used the drill bit to expand the deposit. Lo and behold, he did. The second thing he did was he went to Ivan Bebic and he bought a deposit called Homestake Ridge above the old Dolly Varden deposit, theorizing that those two deposits in relatively close proximity to each other had a similar genesis. And if they weren't connected, that at least perhaps they represented a camp as opposed to two distinct deposits. And Sean has done 3 things really. He has continued to drill out the Dolly Varden, the so-called Valley discovery, while he has continued to drill out Homestake Ridge. But importantly, they've begun to do important work between the two deposits to look at the geology and look at the nature of mineralization, and to the extent that they can, tie the two deposits together. If the two deposits do tie together, Both exhibit some polyphase mineralization, which is good. If the two deposits